Hello, and good morning, everybody. I'm your boss, Joe Boss, and welcome to another daily plan. Let me make sure to turn on streamer mode here in the Discord. Oh man, we got an interesting show ahead because we have NFP to trade, and boy, there's a lot of volatility around the different expectations people have, let me show you what we got here. Let's turn that one on. So if we go up, 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 you can already see all the charts. So here are the notes for NFP. Let's go over a few facts. Bloomberg NFP forecasts are wildly variable right now. So for February, they range from a minimum of 30,000. If I can zoom in maybe on this one, or at least do a little bit of a drawing. Here, I can actually turn on this, and I can turn on this. There we go. Right over here. Let's turn on the reading mode there. And turn on the drawing mode. Ah. It won't let me do the drawing mode for some reason here in my Epic Pen. Ah, there we go. That's what I needed. Over here is what we're looking at. So that is the average, that is the maximum, and that is the minimum on the Bloomberg consensus. So this is just, okay, what's the minimum, the maximum, and the average of all the people who are setting expectations for NFP. And it's a pretty wide range, don't get me wrong. It's much wider than a lot of the prior, NFP stuff. And this is a full picture of all the NFP expectations. And you can see that 300,000 number, that max comes from this one dude way over here. And this 30,000 comes from this one dude over here. Most of the expectations are roughly along this line here. So, I don't know, it seems like 50,000 to 180,000. It's kind of like the normal zone, maybe 170, 175. This area right here, the chunky spot in the middle, is the nominal expectation. Effectively 140 to 180, right? So this would be on the lower end. This would be on the higher end. So that is that for NFP expectations. So in the median right there, 160,000. If I go to Financial Juice and I look at the forecast, so the prior number was 143,000 and the median expectation is 160. So if we get around 150 to 170K, things net will be looking pretty good in all seriousness. Things will be pretty all right in my book here. Hello, Ari. Nice to see you in the chat. Nice to see you. Oh, man. These streams have been doing pretty well lately, I have to say. And now that we have all of the technical difficulties with Kick and Twitch and WAP all set up, I see you in the chat over there, Aristotle. Thank you for joining me in these streams and hanging out for sure. Absolutely appreciate it, especially on the WAP, because that gains boosts and activity on the WAP. It brings it closer and closer to, in WAP, in the categories for trading, there's a lot of competition. There's a lot of people who do trading on WAP. So every little person who watches these streams on WAP, that helps. But also on YouTube and on Kick and on Twitch, Kick and Twitch streams are more for personal preference. Some people are like, dude, I don't want to watch streams, so I can't hang out in Kick because I just like the Kick platform. And the same goes for Twitch, right? So I don't mind offering options and then connecting everything with a multi-chat and allowing everybody to just be where they want to be to enjoy the content. But all the VODs are going to have to stay on YouTube, right? Kick and Twitch VODs, that's kind of like, okay, I guess maybe if you're Kick exclusive, you would do your VODs there. But if you want to actually watch the live stream recordings, you're going to want to hang out and subscribe over on the YouTube channel. The live stream recordings are on WAP, but it's probably a more pleasurable experience on YouTube because that's 1440p if you got the monitor for it and the resolution if you want. So let's continue. Layoffs, recent Challenger layoffs data. Remember yesterday we had we had these Challenger layoffs. They announced 221,000 job cuts. I remember one statistic, around 60,000 of these job cuts. Oh, let's turn on the music. Around 60,000 of these job cuts came from Doge, which actually was a lot less than what was expected, I believe. These layoffs usually take time to filter into the numbers. Okay, so we're not going to see these job cuts actually impact this NFP, but they pose a risk for upcoming NFPs. The San Francisco Federal Reserve estimates that extreme weather events in January had a large negative impact on NFP growth. These weather effects are likely concentrated in leisure and hospitality and construction industries, where job growth has been consistently positive for 2023. But where growth was flat in January 2025, jobs growth may rebound in February if the near zero growth last month was indeed weather related. And you can see that's the zero growth that they were talking about. This little spot right there, that was effectively near zero growth. And then pow. San Francisco's Fed estimates that weather effects suppressed NFP by around 80,000 in January, suggesting that growth may rebound in February. Yeah, that can be quite a big old deal. Let's go ahead and use this little mouse highlighter thing. That seems like that might be helpful in following me around. It is kind of laggy, so yeah, let's not do that. In some other news, we had some very positive Euro news developments. Eurozone GDP got revised higher by 0.3 percentage points year over year. Really, really, really good. If you go and you check out the dollar today on that news, you can see the dollar fell when that news was released. Let's see, that was 2 a.m. So that was right. Oh no, that's actually right here, right at the bottom. We got that revision right here at the bottom. Wow. So we've been falling all of pre-London and into the London Open. We had most of our sell-off. And then if we go to Euro, yeah, Euro's had another rally here. But the yield spreads have been weakening, if I recall from earlier today. Yeah, on the shortest of terms, they've been weakening. So the yield spreads aren't like +8, +9 now on the total sum here. But net, the yield spreads over the last week and over the last month are still insanely positive. And when yield spreads are this positive, it's just, well, it's just, you can have some insano momentum. I actually prefer this indicator over pretty much every other momentum indicator that I've tried. This one indicator has kept me in more trades for longer and more accurately than most other momentum indicators that I've used. Okie doke. Sorry, just adjusting the microphone here. Again, if you're in the chat, say hi. Tell me what you're thinking. Let's see here. Yeah, because as we get, NFP is still 45 minutes away. We got a whole hour here before NFP comes in. So it is a good time for questions, a good time for review. If you have any questions about the indicators, if you have any questions about how to get access to them, which is right here, just go ahead and hop into the Boss Trading Group. And if you just want to hang out and do some research with myself and other people in my trading community, go ahead and hop on over to the Discord over here. And you can post all of your trade plans. You can share some trade ideas for the stream, some topics, maybe some trading results here in the trades forum. And today is Friday, so we're going to be sending out a bunch of links to all of the analysts and institutions that release their links for their updates for all of their weekly analysis. And then we have research forum. We had some good updates in these research forums, especially for the Australia federal election. Thank you very much on that front, Big. Really appreciate it. That information was super helpful because I used it to just pinpoint this. Yesterday we brought up Cyclone Alfred, and if I can, I'll go ahead and copy this over here. So this is Cyclone Alfred, and you can pause and check that out. It's expected to land on March 8th. So we're getting two things. We're getting the UK Spring Statement, which is part of a fiscal budget update in the UK on March 26th. So we're going to see how that impacts the Great British Pound. So we're going to begin focusing on looking at any news in the UK on any of these developments on top of any other developments. And we have fiscal budget updates coming soon here. Right? Australia's Prime Minister Albanese to reveal March budget, national vote in May. So Cyclone Alfred is an Australian cyclone heading for the Australian east coast here. And you can see the path that the cyclone has taken, and it's expected to make landfall tomorrow. So we're going to watch the news for this. We're going to be making a thread. Actually, I can just make the research thread now. It actually wouldn't be too hard. Let's see here. Generally speaking, our rule of thumb is set up the thread so it has a basic Wikipedia article to begin with, and just copy paste like the most, like the important information right off the bat for context. So let's copy first a couple paragraphs here. Set this as geopolitics, like so, and post. All right, and then we'll go ahead and pin this first post. Right there, pin. All right, cool. So if anyone wants to help with doing some research specifically on the cyclone, because I'm pretty certain that there'll be videos and news interviews and reports on the damage from the government. So that'll be for doing the analysis on the cyclone's impact. So if you're in Australia or you want to help understand Cyclone Alfred's impact on Australians better, go ahead and help out and check out that thread in the research forum. And again, the way you get there is by going here to Plan the Profit Trading Group and hopping in. And this says join. Yeah, all you gotta do is hop in and say join. Alrighty. Let me know. Let's see here. So far, so good. Alrighty. Let's continue on. We got some updates on the tariffs from last night. Trump posted this on X after speaking with President Claudia Sheinbaum of Mexico, I have agreed that Mexico will not be required to pay tariffs on anything that falls under the USMCA agreement. This agreement is until April 2nd. I did this as an accommodation and out of respect for President Sheinbaum. For our relationship has been a very good one, and we are working hard together on the border, both in terms of stopping illegal aliens from entering the United States and likewise stopping fentanyl. And then goes ahead and thanks her for her work and collaboration. And then these are some comments from Sheinbaum. Yeah, calls Trump excellent and respectful. Let's go ahead and can we zoom in any more than this? That's fine. President Sheinbaum, we will keep working together, particularly on migration and security, particularly the crossing of fentanyl into the U.S. Agreement to pause tariffs on Mexico's USMCA compliant goods until April 2nd. Particularly all of the trade we have with the U.S. is under USMCA. That's a nice qualifying statement to have from yesterday. All right, U.S. Treasury Secretary comments. So, Bessent went and spoke at a financial summit conference yesterday. He said a couple of things. The Trump administration has kept enhanced sanctions in place and will not hesitate to go all in should it provide leverage in peace negotiations, talking about Ukraine. And then said overuse of sanctions could affect US dollar supremacy. I was actually thinking earlier today, one thing that the Russians probably would say if they really wanted to have their way on Ukraine would probably be something along the lines of, hey, United States, we will go back to selling our oil in US dollars if you agree to, let us keep our land and not put a standing military in Ukraine. I wonder how the United States would respond and how the general public would respond if Russia offered, hey, we'll use the US dollar, right? We'll go back on our BRICS agreements to shift away from using the US dollar for oil payments. But for you, Mr. President, for you, Mr. Trump, we'll go and reconsider that and go back to using the US dollar if you give us most of what we want for Ukraine. I really, really wonder how that kind of negotiation would go down. I wonder if Trump would be interested in that sort of thing. And I wonder how Europe would react to such a deal offer. I don't know. We'll see. We'll see. Hello, Harold. Short euro dollar and not even scared. Yeah, a lot of people, including myself, want to stay short euro dollar. It is in a really crazy spot right now. I mean, if we go scroll up here, B of A Global Research raises Eurodollar forecast to 115 by end of year from 110. So they were expecting Eurodollar by the end of the year to be around here, around this price by the end of the year, and now we're about 100 pips away from it. Now the question is, do we actually go up here right now, or do we roll over? Look, generally speaking, when the yield spreads are this positive, it's very, very, very hard to catch a top in a timely or clean fashion, especially on strong moves like this. And if you're curious why the euro has effectively moved up in a straight line, it's because all of the German fiscal stimulus that has recently been promised, I personally don't think it's enough to justify or warrant this kind of reaction. but the promise, the announcement of the fiscal stimulus has been enough to say, hey, we are looking now at getting invested into all these defense companies, and we're doing all this defense infrastructure. Let's go ahead and spend, $50 billion a year, $500 billion in euros total. I just think you need to spend more than $50 billion a year for that to be really adequate stimulus, in my opinion. Like $50 billion a year is good. It's not nothing, but it's for defense and infrastructure that Lord knows how long will actually need, how much time that will actually take to get those projects completed and implemented, and what the lagging effect will be on actually achieving that kind of growth. So this move is off the immediate announcement of that money being spent, but really the big money bazooka that would really help growth. If I could turn down the music down just a tad, the real money bazooka that would really help growth in Europe is if the German debt brake gets amended. But you know what? Unless the Greens effectively are brought into the government coalition, it doesn't seem all too likely that the Greens are going to go for the debt brake. And kind of the same thing with the AFD. They want concessions on migration before they agree to the debt brake. So we'll have to wait and see. And it can just be too many conflicts of interest, honestly. Too many conflicts of interest. Too many cooks in the political kitchen in Germany. So I don't have a terribly great hope that they'll be able to get that kind of fiscal bazooka in without MERS, the CDU, and the SPD making huge concessions, and MERS following up on his migration stance, and then giving some concessions to the Greens, which effectively means that some of that bazooka money is going to go directly into green energy, wind and solar stuff instead of nuclear, because the Greens in Germany are anti-nuclear. Yeah, I'm not too big of a fan of the fiscal outlook there in Germany on that front. Let's go ahead and keep the show going. Yeah. There's the short euro, and hello, Harold. So yeah, we still got 30 minutes until NFP. I started the stream pretty early today just so then we can talk about whatever we want to talk about, so then we're not rushing into events. Let's keep it going here. We have a few more updates, just a couple more. Okay, Ukrainian updates. US and Ukrainian officials are going to be meeting in Riyadh shortly. Rubio, Witkoff, and Waltz are headed to Saudi Arabia on Tuesday next week to meet with Ukrainians, including Yermak. So we could see on Tuesday or Wednesday, probably sometime Wednesday, depending on the time zone shift, maybe super early in the morning in the US, some news on the peace negotiations between the Ukrainians and the Russians, or at least in the minerals deal between the US and Ukraine. So we're going to make sure we have that on our calendars and watch out for that on Tuesday. And then U.S. press conference. U.S. presses Ukraine for a quick ceasefire to go with minerals deal. That's all well and good. So this is probably a hint of, hey, maybe this talk here in Saudi Arabia is going to be on the minerals deal, right? And then later on the following day, Zelensky calls for a truce in air and sea after Russian attacks overnight. So, look, just because there are peace negotiations currently going on, there's nothing signed. There's no ceasefire. So, you know, don't get me wrong. When a ceasefire starts, this would be unacceptable, but no agreement's been signed. The war is currently ongoing, and the goal right now is to try and end it. So, you know, that's war. That's war for you, sadly. All right, on the ECB, so some more euro-related stuff. ECB sources, rates are still likely to fall further, 2.5%, unlikely to be the bottom of the cycle, so that's going to be more gasoline on the fire for euro area growth, and probably for appreciation here as people try and buy more euro to get exposure to that growth. But we'll have to actually see if that transitions into growth. It was very, very nice to see how GDP popped up in the macro data today and was revised higher. That was very, very, very positive development for the euro and European assets for sure. And then ECB officials see April showdown on whether to cut rates again. So there's a decent number of ECB officials who are like, well, if the economy is starting to grow again, we might start getting some inflationary pressures coming back in around summertime. So maybe we should lower expectations for rate cuts later on in the year. And mostly that's what the pricing markets, that's what people who bet on rates have effectively been doing, has been cutting back their calls for rate cuts later on in the year. I'm pretty sure it's been a pretty nutty week. Yeah, you can see. We usually don't go this high up unless we have like insanely crazy moves going on the macro side of things. Alrighty, let's go ahead and check things out here. Guys, go ahead and recommend some assets for me to pull up. Let's go ahead and check out a few charts here. We have NFP in about 25 minutes. So we finished all of our notes for today. And if you want a copy of these notes, let's go ahead and share them here in the general chat. So if you're in the Discord, go ahead and stay on the lookout for that. Gold. Okay. GC. These are gold futures. It's on a 10-minute delay, so not the end of the world as far as delays go, but futures data is, especially the continuous contract data, can be quite clean. Nice rebound on the risk on move that we've had so far this week. Nice rebound on gold so far. Let's check it out with the probability pivots. And this is using high data. So we're going to be looking at between which two pivot points does the high for the week usually come in between. And is it right around here? Yeah, it is right around here. most of the time, the top for the week seasonally comes in right around here. So here's our top. And this is our largest probability. Good stuff. Nice little guide there. And next week, it's pointing to up here and also up here as far as upsides go. I do have to point out though that it's probably going to give you like a more rounding motion. Let's check out the low odds for next week. Look, we're now doing trade planning for the week ahead again. Oh wow, 40% of lows. Yeah, so maybe we end up with something that looks a bit like this. Set that to red. And set that to blue for our closing odds. And now let's go ahead and look at our closing odds to find out where the week usually ends. Alright, so let's pull this down just a bit. So generally speaking, on a seasonal basis, based on how weeks usually move seasonally, this is how the following week moves on gold. Let's go ahead and timestamp our expectation. Go ahead and do that. Slap in the timestamps for these three here. And let's also see how well those line up with the range probabilities for the following week. Yeah, so that'd be about a high right around here at this red peak. Right around here. And then a low right around here at that low peak. And we do have closing odds. And they'd be on the lower end here. Which is all well and good. So yeah, that would be the trade plan for next week on gold. So yeah, guys, remember, you can still request charts and whatnot. Like, I can still do trade plans on the stream with these indicators. I mean, look at that. I just did the entire trade plan for next week in like 2 minutes on gold. It's not a huge deal, right? Not a huge deal, at least when you have decent indicators, right? Decent stats, that is. Of course, we did mention we want the probability pivots. There's not that many closing odds way up here, so I'd be on the more cautious side of setting bullish expectations for the week ahead. But they do occur. Right? Maybe doing something like this and then pulling back a lot. I mean, going around, call it the high 2900 handle, around the 29, yeah, when you're in the really high end of the 2900 handle, I wouldn't mind myself catching a shot on the short side, expecting the thing to close lower by end of week. I certainly would not be opposed to that. At least based on this analysis from these indicators, right? You can always update your expectations, which is fair game when you get new information available to you, right? Always update your expectations when you get new information. So yeah, guys, keep sending me, like, don't get me wrong, not every single stream am I going to allow you guys to, like, ask me for chart stuff, right? Some streams, I got a rant to say, I got things on my mind, right? But today I wanted to make sure that we went ahead and covered a few things that you guys wanted me to cover. Alright, let's check that out. Alright, how's BTC looking after the latest announcement of not getting picked up by the Treasury, but only through forfeiture? Yep, I saw that. Later today, we are having, if I could bring this up. Later today, we're going to be watching the White House Crypto Summit. So later today, when that crypto summit takes place, there will be another live stream, and we will likely get more information on that. I believe crypto pulled back, so let's check out Bitcoin. Yeah, you can see on that announcement over there, we did dip, and so far we've bounced back after that dip. So crypto being, the forfeiture thing, sure, it wasn't taken well on the announcement. Things have recovered since then. And net, it seems like an alright idea in my mind. I wouldn't, I was watching Tone Vase yesterday complaining about the conflict of interest in how a lot of people in the White House today who are in the administration own a lot of XRP, Sol, ADA, and don't get me wrong, a lot of people own Bitcoin, a lot of people own ETH, but there's arguably some conflict of interest. However, I feel now, and that Vase stream was before the announcement that you're mentioning, Ari. After the announcement, I was like, oh, well, if it's only from forfeiture, how are they going to get any XRP? How are they going to get any ADA? How are they going to get any Sol? Right? How are they going to get any of these altcoins that usually aren't seized in these kinds of operations? Right? Don't get me wrong, I'm pretty certain that the US government maybe has some, but it's a lot more valuable to a fraudster to generally get Bitcoin or ETH in the end, because those will, over the long term, probably make more money, I'm assuming. Also, they're arguably easier to liquidate. Non-farm payrolls came out at 150,000. Let's turn on Financial Juice voice chat.
4.1%, 4.1% higher than forecast, 4%. Average earnings year over year at 4%, 4% lower than forecast, 4.1%. Private payrolls 140k, 140k lower than forecast, 147k. Looking to the market, seeing some weakness come through in the dollar here. Average work week hours 34.1, 34.1 lower than forecast, 34.2. Average earnings month over month at 0.3%, 0.3% as expected. Manufacturing payrolls 10k, 10k higher than forecast, 2k, and the labour force participation 62.4%, 62.4%, which is lower than forecast, 62.6%. For Canada, their employment change was 1.1k, 1.1k, lower than forecast, 20k. The Canadian participation rate at 79.8%, 79.8%, higher than forecast, 79.3%. The Canadian unemployment rate 6.6%, 6.6%, lower than forecast, 6.7%.
Alrighty. Let's see here. US employment change. Let's go ahead and bring this out, you guys. Actually, I'll just cut that and put that over here in this browser. So let's see here. Yep. That looks like a pretty good number to me, and unemployment stayed the same. Honestly, that's gonna help the Fed. That should help the dollar. So the initial weakness on the dollar from the announcement, I think that should be going away. I want to say my gut feeling right now is that this is now the low for the month on the dollar, at least for now. Again, I've been looking at this on range probabilities on my indicator for a hot minute here. We've mentioned this a few times on stream and a few times in the trading group. With range probabilities, what we're trying to do is find where the most likely low or high for the month is going to come in. And this looks at every single month and every single week or every single day, and it finds where the frequency. It creates an actual probability distribution, like, okay, most of the lows occur here, most of the highs occur here, and we get a bump in our probability distribution for far off edge cases over here. So in this kind of situation, I would, this news here for US employment came out exactly how I would expect for a low in the dollar to actually occur here. Oh, I'm not gonna, I can go to, you can bring up quarterly ranges, right? But, the quarterly range is saying, maybe there's something way down here around 101, but I don't see anything, and I personally don't use the quarterly ranges. I think that there's too much that can change over month to month, like with crazy moves. Anyways, I think this data is more or less in line. Let's see here. US short-term interest rate futures drop after jobs reports. Traders back away from bets on May Fed rate cut, and that's what we were looking for. That was exactly the risk we pointed out not too long ago. This will make the dollar stronger. US short-term interest rate futures drop after jobs report. So we should see yield spreads move in favor of the US dollar now at this point on this announcement. But no. Right, these yield spreads are still in favor of the Canadian dollar on this side. Let's go to Australia. We should see, look, all this is green. So that's in favor of the Aussie dollar. These yield spreads, these are more mixed. So maybe New Zealand is the better short play here. Great British Pound. Again, we have spring statement coming up here. These look like they might turn over. On the short term they are, but over the week and the last month, these yield spreads are still quite positive. And you can see since the yield spreads have been positive, it's been a really sharp ride higher. On the euro side, we're almost up 100 pips on the day. Wow. That's nutty. And what's going on with that's a visual bug, definitely. Yep, just refreshing the time frames fixed that. I don't know why that happens on charts sometimes. It's not just my indicator either. I see it on other indicators that I use here. Again, this is all very positive on the yield spreads. This is like insano positive. So I'm not too sure sticking on euro dollar shorts is going to be particularly smart idea here. Like, why is this rising on rate cuts getting priced like on a more hawkish FOMC? Is maybe they think that it's going to hurt growth in the United States, right? Maybe they think it'll hurt growth in the US. That would be the idea that I have. Maybe they think Oh, the Fed is more likely to cut rates. Oh, Canadian swap market see a 74% chance of a Bank of Canada rate cut March 12th, up from 71%. Alright, so cool. Again, I don't you know, don't get me wrong, the growth side in Europe is good on the fiscal stimulus side, but that's still based on expectations. And trading is about getting exposure to the change in expectations. So it doesn't really matter what I think like should happen. If expectations go from bad to good, that's going to be positive for the asset. I mean, just look at the thing. Expectations got better, right? And the asset improved, like, dramatically. Man. So yeah, go ahead and hit me up with some more charts to check out. Maybe some equities we can check out. How has the S&P done? The S&P is pretty much flat on the day so far, so it's holding up. The S&P is doing a-okay. I think it's like, okay, we got a little bit of relief. A little bit of relief here on the economic side of things. How is Bitcoin reacting to the data? So far, so good. How about commodities? Let's try oil. Oil is bouncing up on the day, but man, has that been a horrible downtrend, especially recently. Let's check out Nvidia. It's going to have a gap open for pre-market. Ford is doing a-okay, it seems. Apple. Apple's going to be doing all right. Apple's going to be doing a-okay. So nothing terribly crazy going on in markets. Nothing terribly out of the ordinary. Again, I'm more in line with maybe the US dollar should be gaining some strength because of this economic data. But I don't know, maybe that's just getting overwhelmed, right? Overwhelmed by the sheer fiscal bazooka of the European military-industrial complex, right? Again, I'm waiting for some charts that you guys want me to check out. It's not every day that I take requests. Let's see here. Traders still expect about 75 basis points of Fed easing this year. So we're still looking at 3 rate cuts generally. But the odds of getting those 3 rate cuts have decreased. That's the current scenario that we're in. Alrighty. Anything else to check out? Okay, I know where to get some nice information here. Let's go ahead and check things out. This guy is saying that the US job market is now in a recession. So let's see what this guy is talking about here. Holger, market maniac, author. I think this is a German analyst. U.S. labor market is on recession alert as job market cools with large discrepancies between establishment survey and household survey. Okay, I already want to close this because that's just... Yeah, don't get me wrong, there's discrepancies. There's always been discrepancies. You can just look at this chart's history and see all the quote-unquote discrepancies. So I just, that's... Don't get me wrong, it's a large discrepancy, but look back here, December of 2023, the discrepancy was even larger here. Did we have a jobs recession there in the US? No. How about the positive discrepancy 1 month ago? Was the United States in this, like, gonna have this huge employment boom? It's just... that's what happens when you read someone's commentary and it's like, did they even look at the chart that they shared, right? Unless the analysis today has like some kind of specific context that you're adding, like, hey, we qualitatively got this change because of X, Y, and Z, that leads me to believe that this is likely at least going to continue in the short term or in the intermediate term. I get all that. So you can actually more clearly see the response that we got out of NFP here. Let's just make it regular chart colors. Let's see. All right. In the jobs report, we had a decline of 10,000 federal workers. That only includes job losses by February 15th. So everything that's been cut in the last 3 weeks, call it, hasn't been tallied into this latest NFP. So next NFP, exactly like what we read over here, we expect the layoffs to take time to filter and pose risks to upcoming and future NFPs. So maybe not this month do we have the big downward surprise in NFP, but maybe it's the March report that comes out in April or the April report that comes out in May. We'll see. All right, let's check. Do we have any other major economic data coming out? We have a bunch of central bankers coming up to speak around 7 a.m. A bunch of central bank speakers, man. Look at all that. Powell is speaking later today, man. Dude, it's gonna be a busy stream. I'm gonna have to keep streaming here. $5:45 right now, and that's about an hour and 25 minutes away till Man speaks. Yeah, that's like 4 hours from now and when Powell speaks. So I might have to set up another stream schedule for being there when Powell speaks, because we kind of don't want to miss that. In all seriousness, I already have a stream set up for Trump's remarks at the White House Digital Assets Summit here. Right? And I already have the stream details and the event details organized for that. Actually, I'm going to have to set this up for 11, not 12:30. So I'm going to have to move that stream to start a bit sooner. Gotcha. Alright, Ari, thank you for hanging around. I'll see you in a bit, hopefully later today. Alright, let's go ahead and set up the correct event time here. Not a problem, Harold. I'm still doing chart requests here, so if you want me to look at a particular asset, go ahead and let me know. I'm just updating the stream times. For the White House Crypto Summit here. We're just watching the post NFP reaction here on the euro dollar in the meantime. Next, and save. All right, cool. All right, have a very safe drive, and hopefully you'll enjoy the commentary here. All right, we got our links all set up. All right, so that's the link in the YouTube chat that will take you to this. The White House Crypto Summit event with all the links to all the streams. That event will be going on shortly. In a few hours after this stream, we'll have to do that one to see how that moves markets, especially the crypto markets. And we can also follow up with what Powell says at his speech in that stream as well. Let's actually check out Great British Pound because we're about to get, I believe, comments from Man. No, Man speaks in an hour and 10 minutes from now, not 15 minutes. Sorry. Alright, so the next stream is going to be in 4 or 5 hours from now. I understand that'll be kind of late for some of you guys in the world, but if you are trading crypto, you're no stranger to staying up all night for news and events and stuff like this. Mexico's economy minister. We have reached an agreement about steel and aluminum, so that'll be nice. ECB, Kazakh's services inflation still needs to ease more. Uncertainty is much higher. The task is 2% inflation, not reaching the neutral rate. We must keep an open mind for April amid uncertainty. Yes. I got another thing here. The risk of recession has increased in US, Canada, and Mexico, according to 70 of 74 economists polled. Now, here's the important question. When you read a headline with that, what do you think? Do you think, oh, just because all these economists have, 70 out of 74 economists say chances of a recession have increased? Does that make you feel like a recession is coming in the US? Or do you get critical like myself and ask, well, how much of an increase? Trading is about the change in expectations. The greater the change, the greater the move in the asset. So if the change, the risk of recession has increased, if that increase is marginal enough to just be small or marginal enough to actually make a difference, I want to know qualitatively what the size of that sentiment increase was. Otherwise, it's not totally worthwhile putting that stone in a glass jar of your mind and actually letting it take up any space. It's worth, maybe researching it and getting an answer to that specific question. But other than that, nah. Not interested in reading that stuff. Alrighty, you guys. I'll go ahead and just end the stream here because we'll go ahead and hang out in Discord. We'll be doing some good research here. Let's see, Cyclone Alfred, all good. Again, if you want to contribute to this, go ahead and hop into the research forum. And I'll be live in about 5 hours for that crypto summit at the White House. Certainly hope you guys have enjoyed the stream so far, and the stream that'll happen later today. And I will see you all in a bit.